If you have questions, concerns, and are just lost when it comes to planning for retirement, meet Steve Hoyl and Derek Caldwell of the Hoyl Financial Group. I think you saw it. We talked about it earlier this week on NBC. They did a special about what they're calling the squeeze here in Texas. And basically what that means is that more Texas homeowners, they're seeing double-digit insurance rate hikes as disaster costs pile up. And just to kind of put this in perspective, these hiked rates cost U.S. homeowners an estimated $21 billion more in 2024, so a year ago, compared to 2021. So homeowners all across the state here, they're feeling that financial squeeze as insurance premiums skyrocket. And then, of course, we have to deal with that extreme weather and sometimes some disasters that come through us.
Well, I think that's a huge deal. I just think, though, the problem is that people have to come up with that money somewhere to pay their principal, interest, taxes, and insurance on their home. They're trying to max out their 401k, trying to contribute money, and at the same time, the cost of goods is so expensive. And DFW, we have a lot of variables right now. American Airlines has their hub here, and they're now announced a huge layoff. They're calling it a COVID layoff. They're now trying to fix the problem when business was so bad for COVID. So, people are worried about losing their jobs. Thanksgiving's a few weeks away. Christmas is on down the road, and people are going, I just can't afford fuel. This last week, I noticed that fuel was down a lot. Derek, our chief operating officer, makes fun of me, but I gauge fuel price, and I look where the cheapest fuel is all the time, and I go get cheap fuel. Everybody has their thing. Now, clothes is a whole different story, okay? But when I go to the fuel pump, I love to talk to somebody that's filling up about what things cost. The other day I was there, and this lady, it was a couple weeks ago, and the fair was still going on. And she said, we're going to the fair, but we needed to stop first and fill up our car in case we used all of our discretionary money at the fair. And even not to get off on that, but the fair had about a couple million people this year, but it was down 400,000 people from last year. And I think it's because it's so expensive. People at some point think we've got to have the basics. We can't afford to go to the fair. So I just really think the squeeze is happening.
Yeah, the squeeze is happening here in Texas. And, just to kind of touch on this as well, obviously with the government shutdown, they shut down the SNAP benefits. That is something that's impacting people nationwide here. And you talk about how expensive things are. I was reading something. They were giving statistics about how a lot of food shelters or, churches that have food to give away, they don't even have enough to give away because a lot of people aren't donating as much as they could because they're just trying to put food on their own table. So again, it's just a trickle down effect of this just craziness right now.
I think this year at the holidays, people aren't going to be as worried about having their turkey as they're worried about having food all week long. I think people's priorities are really going to have to change. And, Jess, it really switches over to retirement monies. People start backing out their match that they're making to their 401k. They're really looking at that. And then people make the biggest mistake they ever make, Jess, is taking a loan from their 401k. It should be the absolute last thing that you ever do is taking money from your 401k. Derek and I talk a lot about this, but I always ask people when they come to see us, we get to know each other, and I always say, how much money do you give your kids? And it's either none, we never will, or, well, he does or she does. It's always somebody else's fault. And then we start talking about the psychology of that. And I always ask them, do you think the money that you've given them has made a pivotal difference? And they often say no because they tend to build that into their budget. Here's what you need to tell your kids. And the next time they want to borrow money, say, absolutely, I'm going to give it to you. But let me just be laser clear. When I run out of money, I'm moving in with you. And I'm going to tell you, it fixes the problem a lot. But just, we're going to have what's going on in our economy. Families are going to have to work together like they did in COVID to pay for things. And I think it's real.
No, 100% it's real. Just like you're talking to people at the gas pump, how much things are. I was at the store the other day and I was literally comparing prices of the same item, different brands, different amounts. And this lady was next to me and she said, you never thought, you'd go to the grocery store and start doing long form math. And that's literally what I was doing. How much per ounce? How much is this? So you start weighing the options of that. And just to get back to our conversation about inflation, and yes, the market market has been doing really well. President Trump, as I mentioned here, he spoke about that last week on his 60-minute interview. Let's hear what he has to say here.
Yeah. When the stock market is doing well, that doesn't affect everybody. Not everybody's invested in the stock market.
It does.
But there have been grocery prices
are up. 401ks. People have 401ks. Their 401ks are double what they were a year ago.
But for people that don't have 401ks or are not invested in the stock market, but they've seen their grocery prices go up. Inflation.
No, you're wrong. They went up under Biden. Right now, they're going down. Other than beef, which we're working on, which we can sell very quickly.
Now, there's a couple of different ways we're going to discuss this. First of all, he talks about those that are lucky enough to be invested in the market and are lucky enough to have those 401ks. He's saying that most of them have probably doubled within the past year. Steve, do you feel confident in agreeing with that, or what are your thoughts?
Well, I think that they are very high. I mean, I think 401ks have really come up. But have you ever heard the term, what goes up can come right back down? Talked a lot last week live on the radio about your 401k becoming a 201k. I mean, I think we're only one crisis away from a huge correction. And I think you have to ask people, when your 401k cuts in half to a 201k, you're still going to have those high grocery prices. You're still going to have those high insurance costs. How are you going to deal with it? And Jess, I think people out there should get a plan. They need to know the numbers. You know, for years I told people they needed a budget. But today I'm like, if you don't want a budget, you need to write everything down. I've done this for years. People in our office, they come to see us. I had these Texas scratch pads, and I would give them a scratch pad and say, put this in your console or in your side pocket of your car. And every time you go to the ATM, write down how much cash you pulled out and what it was for. Because people come in at the end of the year, we're talking about discretionary money, and they're like, I took $26,000 out, but I have no idea where it went. And I think that's huge. And, I can relate to that. A few years ago, we had a couple come to us, and we put their whole strategy together. They're the neatest people. We enjoy them so much. But one of the things that Derek really did for them was show them, if you continue to spend $25,000 to $26,000 a quarter at Sam's, this is killing your retirement plan. And Jess, it was tools. It was things they didn't even need. Or when I say they didn't need, they were more wants than needs. And they really didn't have any idea where that money was going. And when they alleviated that, it really fixed the draining of the money. So that's one of the things we help people do. Not only figure out an income strategy, but then try to stop the bleeding on spending money. It's crazy. I mean, it really, really is. I don't know. Jess, I'm kind of addicted to Diet Dr. Peppers. Yeah. And I've lost about 35 pounds, and I've done it. One of the things is getting off Diet Dr. Peppers. It doesn't feel your appetite. I feel great. But, there's a QT over here by Love Field, and they had to lay someone off because they didn't have me coming in 4 or 5 times a day to get another 44-ounce Diet Dr. Pepper. And, Jess, I'm going to tell you have more time. You feel better, but I'm serious about that. I did the math. I'm always telling people to do the math. I did the math of 365 days a year for 44 ounces. Now, understand, I'm kind of practical in some ways, and I would get one, and then I would refill it until it was nasty and then get another one. But I did the math, and I don't want to tell you what my calculator showed of how much money I wasted on fake sugar. I mean, it's real, Jess. So, everybody has to figure out their thing. But, when we talk about gas prices, when we talk about homeowners insurance, when we talk about grocery prices, I think it really matters.
100% it does. And you talked about basically seeing the big picture, right? Where is your money going? Do you know your numbers? Do you have that income strategy? That is one part of it. And then, yes, if you're invested in the market, yes, the market's done great. Has your 401k and other investments gone up? Maybe, most likely. But are you prepared for that market correction, Steve, as you talked about it? We're one headline away. We're one decision away for that possibly going down. Could you stand it if it went to a 201k? So that's the first conversation here about what Trump said. Now, the second part here about high inflation. He says no inflation, things are coming down except beef. Here's the deal. I don't care if inflation happened under Biden or under Trump. I do not care. All I know is that somebody needs to make the inflation go down. And until it does, we are all, I know I am, paycheck to paycheck and looking at what's the cheapest way I can provide dinner for me and my family at this point.
Absolutely. I mean, just inflation is real. I mean, people can say we don't have this huge inflation or that we've lowered interest rates enough. Absolutely not. Inflation is real. You have to cut back somewhere. And with inflation, people are going to have to cut back more than they want to. But I mean, just look. I mean, we all talk about eggs all the time, but I'm still amazed. You know, eggs went up because we had a crisis. Have you ever noticed that eggs never came back down?
Well, that's another point because it's kind of like COVID when prices went up for restaurants and stuff. We've proven that we will pay for it. So why in a million years would prices come back down? But that's also another aspect to think about here when it comes to creating that income strategy, as you talked about. When you're working and you're getting that paycheck every 2 weeks, fighting against inflation is a little easier than when you're in retirement and those paychecks stop. So, Steve, how do you both prepare us for possible market volatility, making sure our 401k or other investments don't turn into a 201k? And how do you help us inflation-proof that income plan as well?
You need to call us. We need to sit down. We need to do a risk analysis and a retirement plan review and figure out where you are, where you've been, and make sure that you're not taking too much risk that you cannot afford to. You know, just people come in all the time and they think their money's not at risk. Well, it's not at risk till the 401k becomes the 201k and you lose half of it. But just people are shocked when they realize that 98% of their money is in the market and at risk. And I'm going to tell you something. If you don't want to work 5 more extra years like we had a man do from Pantex in the 2008 correction, you need to call us today. It all starts with a phone call. Derek says it over and over, and he said it best. Either give us at Hoyl Financial 2 hours of your time or give your boss 2 more years. It's totally up to you. That's where it all starts.
You know, Steve, when you think about what really goes into a retirement plan, an income plan, really, a lot of people think, well, I guess Social Security is in there, and I guess my 401k is in there, so that should be good. But the answer really is it's a big puzzle with lots of moving parts, right?
Absolutely. You know, people come all the time and tell me they have a retirement plan. It's called that 401k. And I'm going to tell you, that is an investment vehicle. As your car is a transportation vehicle, a 401k is an investment vehicle to get money put away for that retirement plan. But it's just a vehicle to accumulate money. When you think about a retirement plan, you know, you've got to think about how much money have you saved? Do you have a really good income strategy that's dependable, sustainable, and is going to be there as long as you live or your spouse lives if you have one? You know, I think the other thing when we talk about that, I tell people when they say, how much income do I need? Well, you need a third more income if you don't have a strong tax strategy. If you're going to pay all the taxes as you retire, a third of your retirement monies are going to go just to taxes. And it doesn't have to be that way, Jess. You can do the heavy lifting now before you retire or once your early years of retirement and wipe out the government being your third partner in your retirement monies. It's huge.
Yeah, I mean, I think that's really key there when it comes to having an efficient tax plan, a tax strategy, especially when it comes down to the Trump tax cuts, which he signed in a few months ago, taking advantage of these low tax rates, right?
Absolutely. I think the one thing, too, is we have 2 or 3 years to know what we kind of think that taxes will. I don't really think they'll change much during his administration. So we have a couple of years to kind of plan to wipe out a lot of those taxes. And in our office, when people come to see us, we have some great programs to really illustrate if you wipe out this much this year, next year, over the next 5 years, over 2 years, and look at those different options. People say, well, I don't want to pay all that money in taxes. Well, let me show you over the next 45 years how much you're going to pay in taxes. That's where the rubber meets the road. Do you want this or do you want that? You know, a lot of people say to me, Jess, well, you know, I'm not going to spend those retirement monies. I'm just going to let that money roll up and leave it to my kids. Well, once you live to age 73, you're going to have to take that money because the government makes you take a required minimum distribution. And it's going to wipe out so much of your income. So you can either plan now or later. But, one of the things I tell our folks a lot is the government knows your life expectancy approximately. They know that your kids are going to be in the highest earning years, and they know that when you pass that money on to them, they're going to get a lot more tax money. So it's just a strategy, but you don't have to do it that way. You can plan well, and finish first. Do you want to finish first in retirement, or do you want to finish dead broke? It's totally up to you, Jess. I tell our clients, being educated, knowing the numbers, because just what we find in this strategy, the numbers never lie. They tell the truth.
And when you say know your numbers, is it more so like know how much is in your 401k, or is it knowing how much money you spend a month? What do you mean when you say know your numbers?
I think know all the numbers. One is absolutely how much is your 401k. But I think you also have to look at that 401k and all those retirement vehicles and figure out how much of it is safe. How much of it could you lose in a 201 market correction? I think secondly, knowing how much predictable, sustainable income you can create each and every month for the rest of your life. And if you have a spouse, your spouse's life. And then also know how much of that money is going to go to taxes. And then thinking about health care. Do you have $250,000 saved for an average couple 65 or older to pay for the out-of-pocket medical expenses? Well, people say, whoa, Steve, that's why I have Medicare. Well, let me tell you something. I have lots of fabulous clients that are taking some type of drug that's not FDA approved, but it's giving them extra 20 years of quality of life. Would you rather spend $3,500 a month to live, or do you want to die? It's real simple, Jess. But what we're really doing by having a strong retirement strategy, when we talk about taxes, income, estate planning, all of those things is options. And Jess, what our clients want when they put a plan together for retirement is have options. If this happens in the economy, I'm going to do this. And then every year we're going to sit back down, we're going to adjust it and move forward. But as we take those snapshots each year after you're retired, we're going to know exactly where you are and where you're going. And that's what it is. We're really creating a roadmap for you, your family, and your heirs for the future.
If you'd like to sit down with Steve and Derek or a member of the Hoyl Financial Group, visit retiretexasstyle.com.
Investment advice offered through Hoyl Wealth Management, a Texas-registered investment advisor able to provide investment advice in states where it's registered, exempt, or excluded from registration. Content contained herein should not be construed as an offer or solicitation for investment advice or for the purchase or sale of any security, insurance, or other investment product. Investments involve the risk of loss, including possible loss of principal. Please consult with a qualified financial, tax, accounting, or legal professional before implementing any ideas or strategies discussed here. Content provided is obtained from sources believed to be reliable but cannot be guaranteed as to its accuracy or completeness. By contacting us, you may be provided with information about insurance products, including annuities offered through Steve Hoyl, Texas Insurance License 716036. Annuity guarantees rely on the financial strength and claims-paying ability of the issuing insurance company. Read your contract for restrictions, limitations, or penalties. Steve Hoyl is not licensed in all 50 states. To find out if Steve Hoyl is licensed in your state, please call 806-371-9473.